What is going on, everybody? Happy Friday. Hopefully you guys had a great week out there. That's right. It is our FAANG stock recap show where we join you every Friday to recap all the news in the FAANG stocks plus Microsoft and Tesla. And then finally, we'll jump over to the stock charts towards the end of the video, talk about the price action, which was eventful this week. We'll talk about maybe some areas where you could potentially buy these stocks, maybe even potentially sell them heading into next week. Let's jump into the news. We'll kick things off with Facebook. Started the week at about $264 per share, end of the week at about $268 per share. Like most of these stocks, had a pretty good week. Now, in terms of news, Facebook is rolling out an Instagram Lite in 170 countries. Now, there's lots of countries out there without the internet broadband kind of spectrum that we have here in the United States and the penetration that you have in the developed world. And in order for Facebook to continue to grow, they need to penetrate these other countries. And so they release versions of Facebook and Instagram, which have key features, but don't require the broadband and kind of the space on the phones that the full versions might. And when you look at Facebook, like we do every 3 months here, it does appear that Facebook, at least here in North America, in Canada and United States, it does appear that their growth is basically topped out in terms of growth. And so for Facebook to grow, these types of things actually are critical to the future of Facebook's growth. Now, speaking of Facebook and Google, they are targeted in a new U.S. antitrust bill. I tell you what, every week there's going to be one of these, okay? And I think I've been telegraphing for that on this show for a while now. A bipartisan group of U.S. lawmakers have followed the lead of Australia. I think we've talked about that too. So when this Australia thing came out where they required publishers to be paid by Facebook and Google, I said, look, it's not going to be that big of a deal. Australia is not that big of a country. It doesn't generate that much revenue for these countries. But what it's going to do is these lawmakers in other parts of the world, the United States and Europe in particular, they're not full of great ideas. But when they see one, they do piggyback on top of that. And Senator Amy Klobuchar and another Democrat, along with 2 Republicans, have expressed support for this bill that will allow news publishers to collectively bargain against Google and Facebook. So be ready for more of this. Now, speaking of more stuff going on in Washington, President Joe Biden is expected to name a big tech critic to Lina Khan to the FTC. Now, you might say, look, this was a story last week. No, it actually was as another hiring by the Biden administration of a big tech critic. This young lady is only 32 years old, but it follows Tim Wu, who was nominated last week, who's written books on big tech's dominance and potential problems that it could create. And so if you have these people in charge, guess what's coming for the next 3 years, 4 years is regulation on big tech, especially, I would believe, Facebook and Google in particular. So we'll see what happens there. Now, moving on to Apple, start of the week. $119 went up to $121. Apple had some news this week. Apple Car is believed seeing the company heading to a $3 trillion, that is with a T, valuation. Right now, Google has about a $2 trillion valuation. So you bolt on another trillion in market cap combined with the buyback that Apple just continues to execute. And yes, I think shares could go quite a bit higher, although I am relatively biased. This analyst see that the car is able to drive that forward. I think just the buyback in general could drive that forward as well. Now, another Apple bull sees another $3 trillion valuation. So you see the street is just getting on board with this $3 trillion valuation. It's only a matter of time until, the clients of theirs start to pick up on this and it rolls forward. And that, at least that's my belief. Now, Apple is reportedly cutting the iPhone 12 mini production because of poor sales. And I just think, look, people are loaded. You look at the savings, you look at the plans that AT&T and Verizon, T-Mobile allow you to have. If you have that Apple card, you can buy the Apple 12 Pro Max, the most expensive one, and get it on a monthly payment plan, either through your carrier or through Apple. Or look, everybody's been getting stimulus payments and they all cover the price of one of these phones. And so I just think people aren't gravitating to the smaller, cheaper phone because, let's face it, fair amount of people have some money to spend and they're spending it on the bigger and larger phone. Now, Apple is planning to release a mixed reality headset coming next year. That would be 2022 for about $1,000. That would be at the high end of the range of these types of things. But analysts expect that they'll have a, quote, contact lens type wearable between 2030 and 2040. Whether or not you want to put that on your eye, I'll let you decide on that one. Moving on to Amazon, start of the week at 3,027, had a nice dip under 3. If you got Amazon this week under 3, not going to say that you won't have another shot at that, but that, in my opinion, again, when we get over the stock chart, we'll take a look at that in a little bit deeper. Now, Amazon is reporting to open 28 of their fresh grocery stores. These are kind of like hybrid grocery stores. I believe that's what these are. They have one in Los Angeles. I think that's where they kicked one off. And they just continue to open these as Amazon kind of spreads out. They have a dominant position in e-commerce, and that continues to grow for them. The way for them to grow even more and then get closer to the customer for delivery points and things like that is grow out more like brick and mortar. Now, the other interesting thing is they have their just walk out. So they have these convenience stores where you can go in. I think you download an app, you just walk in, you grab stuff and you walk out. There's no there's no cashier, there's no exchanging of money. And what they're thinking of doing, and this is telegraphed through everything that Amazon does, what they do is they develop technology like AWS, like their just Amazon platform. They allow third parties like myself included to sell on there. This just walk out. They're going to license this to 7-Eleven. They're going to license this to whoever wants it. And eventually, I think you're going to see that roll out, and it'll be a revenue stream for Amazon. I like that business model. Moving on to Netflix, start of the week at $513, went sideways, $518, had some dips, had some rises, but ended up sideways. Interesting stock chart when we get over to Netflix. Now, Netflix is, I like this, Netflix is exploring licensing its content to rivals. So Netflix always had kind of a gate around their content. So the content that they develop, like Stranger Things, The Queen's Gambit, I mean, there's tons of stuff that Netflix like produces and only puts and is only found on Netflix. Well, it appears that maybe they might be exploring like licensing this content like a lot of other people do to maybe NBC or maybe a CBS or an Amazon maybe, or maybe even Apple or something like that. So I think this is a good idea because at some point, you know, the season 1 of Stranger Things might not be bringing a lot of people onto Netflix, but if you can license that out and bring in some more revenue off, a program that's not doing you a lot of good at the current time, I think that's great news for Netflix shareholders. Netflix password sharing days may be numbered. I think what this is a sign of is that Netflix is realizing that their growth days here in North America are gone. Okay, last year during the pandemic, I think it accelerated. I think there's all evidence for this, that it accelerated their user growth probably by a year or two. So now they're going to have to execute some strategies to bring in money because their growth days here in the United, now it's not the case throughout the rest of the world, but here in the United States, North America in particular, Netflix's days are over. So they're not going to allow you to share your password. They've already kind of cracked down on that. They're going to have to raise prices. They're going to have to license out content, et cetera, et cetera. But as the competition, you got lots of competition in there with HBO Max, you got Disney Plus, you got Peacock, you got all this stuff out there. It's going to be tough because Netflix is going to play kind of a fine line. If they go over the edge and then drive you to one of these other platforms, it could be detrimental to their revenue growth. So we'll see what happens. See how Netflix kind of threads the needle there. Now, moving on to Google, started the week at 2088, ended the week at 2050. Boy, this stock is just channeled up in a range. We'll take a look at the stock chart on this one. Not a lot of news coming out of Google outside of that, kind of United States government, Joe Biden kind of big tech crackdown that appears to be on the horizon here for at least Google and Facebook in particular. Moving on to Microsoft. Congratulations to me. I'm going to give myself a pat on the back. If you've followed this channel for any length of time, you know I love Microsoft. Every time we do fundamental analysis on Microsoft, I have to wipe my microphone down because I'm like drooling how wonderful the financials are. For some reason, I've never owned the stock. Well, that changed this week. I was able to get in this stock in my IRA. Whether or not it's a great idea at these price levels, we'll talk more about that when we get over to the stock chart. Now, Microsoft started the week at 229, ended the week 235, had some relative strength compared to some of these other techniques that really sold off, especially when you're talking about like a Tesla. Now, Microsoft hack worsens. White House warns of active threat. This is bad news for Microsoft, but I think anybody that's comfortable with technology knows there's going to be hacking. Obviously, it's not great. It's not a good look for Microsoft, not a good look for anything, but it is a sign of the times, and quite frankly, I don't think it's going to go away. So Microsoft not particularly unique to that experience. Now, probably the best performing stock of this group of the week was Tesla. Now, it was down about 35% from the highs, and it started the week at about $600, ended the week at $693. Really found support on the chart when we take a look at that. We'll see if it's going to hold there or not. I think that's what people are probably wondering at this point. Elon Musk and Tesla are sued for erratic tweets. So imagine that, Elon Musk having erratic tweets that hurt sales, hurt shares. I don't think they're hurting the sales of the car, but they did hurt. Elon Musk has tweeted things like, I think Tesla stock is too high, and some other stuff that I can imagine if you're a shareholder of Tesla, especially somebody that has hundreds of thousands of shares and you're holding that for clients or for performance purposes, you don't like to see things like that. I think the average guy kind of appreciates this kind of things, but you do have big institutional investors that have a lot of money tied up in Tesla, and they certainly don't want to see the stock go down in big ways, especially when we're coming to tweets. And so we'll see where that lawsuit goes. Tesla seen being speaking of $3 trillion stocks, Apple seen being a $3 trillion stock. Well, Tesla is going to join the party soon. And that's according to analysts, of course. And this is an even bigger jump because take a look. Tesla right now is sitting at a $671 billion. That is with a B, $671 billion to go to $3 trillion in 9 years would be massive. Okay. If they do massive share dilution, things like that, it would, affect the stock price. But, factoring in no share dilution, boy, the stock would be up huge if it happens to hit 3 trillion. Whether or not it does that, I think is, up for debate. Tesla expected to have battery cost advantage. Speaking of 2030, they're going to have this battery cost advantage, at least according to these analysts, by 2030. Now, here's kind of the data. Data suggests that Tesla's battery packs cost $187 per kilowatt. GM sitting at $207, and the industry average is at $246 per kilowatt. So think about an electric car. What's the most important thing about the whole thing? Oh, the battery. And if Tesla's able to produce those cheaper than everybody else, well, it could potentially have pricing power, or at least maybe margin, benefit versus its competitors. So we'll see what happens there. Now, moving over to the stock chart, Facebook, as we talked about, Facebook kind of like consolidated more than the other stocks. Okay, when we look at some of these other stocks, especially like a Tesla, man, it had a big downtrend, even like an Apple, big downtrend, Amazon, big downtrend. Facebook, yes, it sold off. It was up at 275. It bottomed out at 254, but it found its footing. And I even put this kind of newer trend line down here at 254, since we saw this 254 level hold 1, 2, 3, 4, 5, 6 times in like, barely a week or two. So this is a key level. 255 is where shareholders stepped in, buyers stepped in with Facebook. Now, we do see that this 270 level, this was pretty hard resistance, and that's basically where the stock is today. So I would say on Monday, that's kind of what you're looking for with Facebook. Do you have a big green candle that busts us up above 270? Again, we did that. In fact, we went all the way up to 278 on this one and then got rejected. Sellers step in in above 270 on Facebook, but buyers come in at 254. I'll let you decide how you want to play this. There's options plays that you could do with this. There's certainly little swing trades and kind of bounce trades you can do this. There's a lot of things that you can do, but over the last couple weeks here, a clear pattern has emerged with Facebook shares. Now, moving on to Apple, here's that big downtrend we talked about with Apple. I mean, this is a big downtrend. From the tops of the start of the downtrends, we're up here at 145, bottomed out here at 116. That's a big move. That's almost like $30 in share price there. We see here the 116 level held really strong. Okay, this big red candle came in here, and we had a nice little, we created a higher low, higher low, higher low. Now we had a little outside day here. So here's what I'm looking for with Apple and actually most of these stocks. Okay, we had a nice little uptrend going, and it's not at all concerning that we had this pullback. Okay, and we're sitting here right at about $120 per share, right where we've had a kind of a support line marked out here. Now, will this 120 hold? If this 120 holds, I'd expect this stock to consolidate a little bit. You'd like to see it get above 123 and resume this uptrend, potentially back up into the 126, 128 range. Now, if that doesn't happen, we get rejected here at 120 and we come down here and we start retesting 116. Well, a lot of interesting things can happen. Now, all of a sudden, our shorter-term uptrend just looks like a fake out, and we could be heading lower. And so that's what I'm definitely monitoring next week. I'll be honest with you guys. If I could predict to any reasonable amount of certainty which way this stock was going, believe me, I would have all my chips on the table. But it's in an area right now where you really just want to monitor it closely. Okay, you break above this kind of 122, 123 range, and I would consider that very bullish, and we probably have a nice little uptrend heading into the next week. Now, you break below 119 and you start heading down here to 116, all bets are off, and I would monitor this 116 level pretty closely because there'd be some buying opportunities down here at 112 and potentially 108. You'd want to monitor those very carefully, in my opinion, though. Now, moving on to Amazon, same thing we saw here. Big downtrend. I mean, we were up here at 34.37, bottomed all the way down here at 2,900 per share. I was able to scoop up a couple fractional shares for my sons down in this box. This box down here from 2,900 to 3,000, in my opinion, is a very strong area where you can buy Amazon shares. If you believe in the fundamentals, which we cover on this channel every 3 months when they report earnings, and gosh, they are absolutely fantastic. Now, we were in a nice little uptrend here, as I show you here with this red line right here. We went from all the way down here from 3,000 all the way up to 3,100 very quickly over the matter of a couple days. And just like Apple, we had kind of an outside day here. We came down here. Now, this is not necessarily something I'm completely alarmed about. I would get alarmed if we come back down here and test 3,000 again. So, again, heading into Monday, I'm monitoring the same thing with Amazon. A break above 3,100 on a solid green candle. Especially if you get about 31, 33, you start breaking above that. Well, we have this 50-day moving average, which I think has turned negative, and I think could, play some havoc onto the stock breaking above, call it about 3,200. So I don't think there's strong upside in this one. If we see that these levels of resistance and sellers step in, we break below 29, basically 3,000, and we come back down here to retest 2,900. I think those are evaluation times, and it could potentially be buying opportunities again for Amazon. Same situation for Netflix. Pretty big downtrend. It's kind of like chopped around here, and it's basically kind of doing this, down move, retrace upwards, down move, retrace upwards, down move, and we've kind of retraced upwards. So if the pattern continues, Netflix should actually make another move down. Now, Netflix, out of all these stocks, is now it used to be Microsoft and Netflix. Now it's just Netflix is the only stock I do not own out of this group. I would consider buying Netflix if we can pull down into the 470 to 485 range. Down in this lower box is where I'd be interested in this. And again, if this level here at 520 should be resistance. 533, where the moving average is sitting, should be resistance. A break below 493 next week, and all bets are off. This one's probably heading lower. Now, moving on to Google. Google's in a stratosphere of its own. I have this chart kind of zoomed out here just to show you the pattern that it's made, and now we'll zoom in here and look. Google is just doing kind of the same thing. It is channeling between 2016 and we'll call it 2120. And until it breaks out of this pattern, I wouldn't expect anything different. It's if you're trading this on a very short-term time frame, you're buying it at 21.15 and you're selling it at 21.18, and that's it. That's where it's at. If a break above 21.22 on strong volume, strong big green candle, well, look, man, this thing could be headed higher. A break below 21.15. On pretty significant volume, I would expect 1920 to be back in play. That'd be the first area where I'd even think about getting into Google, and I probably would only think about it. Probably wouldn't be something I would consider very strongly, but that is where we're at with Google. Microsoft. So I bought Microsoft down in this box. Not exactly sure. I think it was like in the 225, 226 range. Somewhere in here, I was able to get Microsoft last week. 225 to 230 has proved to be a pretty nice little spot here where we've had some buyers step in. Now, we're kind of channeling here. It's similar to Google where we've kind of are just channeling out here with Microsoft, okay? A break above 240 on strong volume. And then, yeah, these all-time highs and maybe even higher than 245 are definitely in play. A break below 225, I would call it 225. Any break below that, and you've got this 50-day moving average currently sitting at about 215 in play. I think there'd be a lot of buyers like me that would definitely step in if we see a move like that with Microsoft. Finally, moving on to Tesla, had the biggest downdraft. Okay, we went from like a $900 stock down to 540 very quickly. Okay, we're talking a matter of just a couple weeks here. Not even that, basically probably about 2 weeks, maybe 3 weeks max, where this stock just was in a very, very well-defined downtrend. Now, it has bounced back like a lot of these stocks. It found footing, and I think this is key. It found footing at the 537 range. And I actually watched a fair amount of technical analysis on Tesla, and a lot of guys had this area marked out right here. And so, again, I said this on another video. It might have been last week that I put these lines on here, and it's not, some of my lines are probably unique to what I'm looking at, but some of these lines, a bunch of traders have on their charts as well. And so these are not unique to me or my situation. And apparently a lot of traders had this 530 came in because that is where Tesla did a complete reversal, went from about 530, how do I call it 540 up to 695 in a hurry. But this 695, call it 700 level with Tesla is proving to be a hard area to go through. Okay, sellers are stepping in at 700. We saw it here, and then we saw it here again today. So 3 days in a row, sellers have stepped in at the $700 level. So it's kind of an interesting, conundrum that we head into next week with most of these stocks, but Tesla as well. Can it break through 700? If it doesn't break through 700 and the buyers, dry up on this one, look, we're probably coming back down here, and the uptrend will be just looked upon as kind of a fake out, and kind of like what we did here as well, where we bottomed here at 618, came up to 742, but then came all the way down to 540. And so if that same pattern happens where the buyers dry up here at 700, we could retest 540, a break below 540. We're into the $400 range personally, where I want to be with Tesla, being it as a speculative stock. That's probably where I'd want to be in that one. Now, the trend would completely be negative. We'd be below a 50-day moving average. You'd have to have balls of steel to jump in on that one. But in my opinion, that's kind of what it takes to be a great investor. We'll see what happens. Let the charts decide what you do. do. Okay, take the emotion out of it. And that's kind of what I did this week a little bit. Look, we had a nice little reversal, and I bought the dip on some of these stocks, Apple, Amazon, Microsoft, and that was it on this group of stocks. But we'll see what happens with this one. Okay, we break above 700 on strong volume. Look, we're probably coming back up here to 778 and maybe even higher. A break below, I would say probably the 618, 619. And yes, the odds are you're probably retesting the 540 level, and you break 540 and you're probably coming into the area where I'm targeting, which is down here from 380 to 440, 450, somewhere in there. Whether or not I get a shot at that, we'll see what happens. Thanks for tuning in this week. That wraps it up for our Friday show. I love all the comments. Thank you, everybody. I think we've topped 80,000 subscribers. Just want to thank everybody. I don't think I do that enough here on the channel. Hopefully, you guys have a great weekend. Good luck with your investments.